Hi, everyone. Thanks so much for joining. It has been a very unexpected week, as it always is under President Trump. He was very much focused on foreign policy last week. Well, this week he's very focused on domestic policy, particularly the Federal Reserve. The Federal Reserve Chair, Jerome Powell, is under a criminal investigation. He was served a subpoena by the Department of Justice. He hit back immediately, almost overnight, with a video saying that this has nothing to do with anything criminal. There's been no criminal activity, and it's all to do with President Trump, his desire for lower interest rates, and his demands to lower interest rates rather than let the Federal Reserve be independent and set policy based on their dual mandates of full employment and stable inflation rates. So he's hit back really, really hard at the Federal Reserve. The Federal Reserve is obviously really central to our global financial system. So if we just take a look at the charts, we'll just see what impact the escalating feud between Trump and the Federal Reserve Chair, Jerome Powell, has had. Well, if you look at the very right-hand side of this chart, you can see that the dollar is weaker. The dollar index had looked like it turned a corner last week. If you just, where my pointer is here, you can see that it broke above the 200-day moving average at 98.80, sorry, but it is now testing that level again. So it didn't get to that 100 level, which we last saw at the end of November. So it didn't quite get there. So it suggests that actually this escalating feud is really having an impact on the dollar. And how we would explain that is that the Federal Reserve is as central to the financial system as the US dollar. Obviously, the US dollar is the world's biggest, most important global currency. The most trade is done in the US dollar, etc. And obviously, the Federal Reserve controls the cost of the dollar. So when the Federal Reserve is under attack by a president or by anybody, it really will impact the US dollar. They kind of work as a unit together. So a lack of credibility at the Federal Reserve means a lack of credibility for the dollar. Right now, we're definitely not seeing a rout, but we have seen a really sharp move lower in the dollar. And if we take a quick look at the dollar, you can just see how broad-based that decline is. This is the dollar against the G10 basket of currencies. And as you can see, all bar one, and in fact, actually today, all G10 currencies are weaker against the US dollar, so led by the Swedish krona and the British pound. You may remember the British pound last week was under a lot of pressure as well. It fell about 1% versus the US dollar, but it's now recouping just under half of that loss from last week. So a big, broad move lower in the dollar, but it's not just the dollar that this feud has had an impact on. It's also on overall risk sentiment. So if you just follow my pointer here, you can see US markets aren't open at the time of recording, but European markets are. Some very mild losses. So this doesn't suggest that there's going to be the bout of risk aversion, certainly not in European markets anyway. In fact, European markets could be the winner if this triggers a sell America trade. And I would also just draw your attention, if you just follow me over to the right-hand side here where my pointer is, the markets globally are a sea of green so far in January. So they've had a fantastic start. But is Trump going to disturb that by being really interventionist at home as well as abroad? Abroad, the markets can cope with. At home, they may not be able to. A few things. Let's take a look at what world equity futures markets are saying. As you can see, they're looking for losses there on the NASDAQ, the Dow Jones and the S&P 500. Currently, futures are pricing in quite a big loss for the NASDAQ 100. So for those biggest tech firms, US tech firms, down nearly 0.9%. A loss of 0.63% for the S&P 500 when markets open later, and a loss of 0.75% for the Dow Jones. So some very big moves expected to the downside for US dollar. And if we just take a look as well, as you can see, this is 10-year yields. 10-year yield has risen sharply in the United States. Remember, yields move inversely to price. That means that US treasuries, 10-year treasuries, are underperforming the whole global space, sovereign bond market space. Europe's doing okay. UK is kind of following sort of in the steps of the US right now. But the US is very much an outlier. They're seeing bond yields rise, and the rest of the world really isn't, not to the same degree. So this just shows that sell America trade, and the fact that the Federal Reserve is now being attacked by President Trump, it's just eroding a bit of credibility. That's having a knock-on effect, triggering a bit of people, of investors, global investors, maybe just reducing exposure to the US, because we're really at a pivotal moment for the Federal Reserve. Jerome Powell has only 5 months left before his term as the chair is up. So it really means that President Trump will pick the next chair. how can we have credibility in who that person is? That really is the key here. And I think that we could see a little grind lower in US assets as we look to what will happen next in this, because in the past we've seen Trump dial back his rhetoric like we did with tariffs, but as I mentioned, very hard to do that when you've already served subpoenas and the Department of Justice have got involved. So we need to see what's going on. But one thing that is doing very well is gold. Made another record today at 4,599. It's currently trading 4,580. So it's maintaining quite a lot of those gains, but it hasn't quite reached that 6,000 level. We may want to wait to see what the US does, but I think that 4,600 level definitely looks like it is on the cards. Whenever there's concerns about the credibility of a US institution that's as important as the Federal Reserve, then that you're going to have to go into gold. But if we look at the global commodity space more broadly, we've got weakness in energy markets. That's kind of to be expected. Obviously, we haven't. We've seen kind of quite a strong run up year to date in energy, and WTI and Brent, they're up 2% and 3% respectively, having a bit of a pullback, 0.7% drop in Brent, 0.8% drop in WTI is fully to be expected at this stage, especially because there is a lot of oil supply out there. Regardless of what happens with Iran and with Venezuela. Now, if we look at gold here, up $71 on the day, up 1.5%, but look at silver, up 5%, $84 an ounce. I'll just bring up the chart there. People were talking, we can't have this parabolic rise. We had a lot of volatility. But again, another record high in the silver price that's not been, that so far hasn't been met with some whipsaw price action. Now, do be careful with silver, because when it gets to these elevated levels, as you can see with these really big candlesticks on the right-hand side of this chart, they go up and then they whipsaw lower. So it's a very, very volatile. Just that period in between Christmas and New Year, we saw silver go up, record high, then come right down, then go up a little bit, then come right down, and then it's kind of eked out some gains. But it's not been moving in a consistent pattern like equities. It's been very, very volatile. So do watch out for that. So whenever silver makes a record high, just be a little bit careful. You can see profit taking very, very quickly. It's a bit more speculative than gold. So gold at this moment in time is looking slightly less volatile, as you can see, just much smaller candlesticks, certainly since the start of this year, which is a sign of lower volatility. So that's just something to watch as we go through. The other area to watch, Donald Trump's not just been having a go at the Federal Reserve, he's also been talking about credit cards, trying to impose a 10% cap on credit card interest rates. Now, that's going to have big implications for banks. We've already seen Barclays in the UK turn lower at the start of this week. We could see the biggest providers of credit cards in the US. That would actually be JP Morgan, Citibank, and Bank of America, who all by coincidence, will report earnings later this week. It'll be interesting to see what they see about Trump and his very anti-capitalist ideas for limiting interest rates for credit cards. But that could have an impact on their share price later today when American markets come on board. But we would point out that actually other administrations have tried to do something similar. The average interest rate in the US is about 23% for credit cards. It's very, very high. So you can kind of see why this is a bit of an affordability issue, and access to credit is problematic in the US. It hasn't actually been under 10%. So that's the cap that the president wants to put on since the early 90s. So that would be a massive move. So I do think we're going to see some volatility in US stocks. We've got the Sell America trade anyway. So broad market sentiment is against US assets today. But we've also got individual sectors could be really hit hard as well. So that includes the likes of the banks. Of course, we think that to add also the Exxon chief has come under some pressure from President Trump after he said that he thought Venezuela was uninvestable on Friday. So we were looking out for Exxon's share price as well. But overall, it's like financial markets, financial markets and macro data meet President Trump kind of in a very explosive fashion at the start of this week. So President Trump is really, one man is really having a big impact across financial markets. Now, we've seen this and we saw how it played out in April. We need to take it steady. We need to hear a little bit more. And I think we will get more clarity as the week goes on. So please follow us. Please read our research. Please look at our website, look at our socials at XTB UK, and look at our YouTube channel as well. Thank you. Bye-bye.